everyone, it is Evan here from the Trade Risk on Friday, September 28th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So we get a ton to cover in this week's video. Before we look at the charts though, let's take a moment to recognize today was the final trading session of the third quarter. It was the final trading session of the month and of course the week. So when we look here at some of those performance numbers, it was a monster week for the U.S. markets. I'm sorry, not week, but monster quarter for the U.S. markets, with the S&P 500 and Nasdaq Composite both finishing higher about 7% for the third quarter, and the Russell 2000 lagging a little bit behind, but still positive, up around 3% for Q3. So some tremendous gains there by the bulls. Despite those gains on the quarter, we did not quite finish green here on the week. We did have a negative week on the S&P 500, closing down minus 0.60%. So if we look here at this weekly time frame chart, that's what we're currently looking at here. Each bar represents 1 week worth of trading. We can kind of zoom in here at this week's performance and notice that we did have a bit of a gap down to start off this week, and it was a fairly narrow ranged week. We didn't really put too much progress one way or the other, and in fact we printed an inside week for this trading week, and all that tells us is that we traded entirely below last week's highs and entirely above last week's lows, giving us what we would call an inside week. And what that essentially suggests is price compression is here. It is moving sideways. We didn't make too much of a trending movement, directional movement this week, and we should be watching. Essentially, lots of traders will look at either the lows from this week, the highs of this week, or you could, spread yourself out a little bit further and look at the lows or highs from last week. But essentially, you're looking at some volatility expansion to happen here after moving sideways, kind of in a tightening week here, indecisive week. Let's see which way we resolve. We'll look a little bit more at that on the daily chart in just a moment. But when we look here, again, just a little more broadly now in the weekly chart, we are still kind of very comfortably grinding higher in this uptrend that has been in place since we bottomed out in April of this year. Nothing has changed. We continue to grind higher. We've noted that, yes, we do have some momentum divergences if we start to look at things like the RSI or in my case, the MACD, which is on the top end of my chart here. We can see that the progress or the acceleration to the upside here has slowed a little bit, but the trend, we are still above all major trend lines, all key moving averages in the S&P 500 on the long-term time frame. Now, when we look at the daily chart, we can see here a little bit of what went on this week. And again, it was really a quiet sideways week. We had Monday session here with this gap lower, and we really didn't move too far one way or the other. We really just kind of pushed around this 29.20 area, 29.15 area for most of the trading week here, and it was just a lot of chop, a lot of failures to kind of hold on to strong gains here. So a little bit of some fading 3 days in a row off of the highs. That's not the most bullish situation to have occurring 3 days in a row, failure to hold those gains. But again, when we look at things objectively here, we still have not done a tremendous amount of technical damage here. This in fact looks like it could just be yet another consolidation, another channel, another flag. However, these sideways periods manifest themselves. They, over the past 4 or 5 months, have just continued to result in breakouts to the upside. Now, eventually that is going to change, and we have some things to talk about here of some of the cross currents that we see out there. But as it stands now for the S&P 500, we are consolidating here. We have this inside week. We are back to the highs that we made in August. So this trend line right here, this horizontal line that you see on my chart around 29.15, that is where we topped out in the middle of August. The market pulled back. We ended up breaking back out to the upside, and now we're back to sort of retesting these August highs, the recent breakout area. So for the short-term traders, I think we talked about this in last week's or in the midweek video. This is a good kind of line in the sand to pay attention to, this 29.15. Clearly the market at least cares about it or is consolidating consolidating around it. And if we start to break out above this, if we start to clear these recent highs here, if we hold this 29.15 as a successful kind of a back test, a retest, then that of course would be a bullish development, and we would have a potential kind of continuation pattern in this trend to the upside. On the flip side, if we do see failure here, if we see us start to break down below this 29.15 and come back into this old range, then we're starting to do a little more damage on the short term, and we'll start to really consolidate in the midterm. And then we have this 28.72 area. We've talked about this quite a bit in these past several weeks. This is the key area to pay attention to. This was the all-time highs made back in January of this year that the market fell pretty quickly and swiftly from in the month of February. And if we start to lose this 28.72 area, that would have some longer-term implications. It is only about 1.5%, less than that, 1.5% below where we currently are trading, so that could happen quickly. But for now, we are still above it. We're consolidating here, and we want to really just see how this progresses, how we tip the hand here into next week. Now, a couple of other things to note is, we do have, as we talked about on this weekly chart, we have some momentum divergences there. We also have, we're starting to see the number of stocks hitting new 52-week lows, starting to get a small uptick here over the past week or so of trading. We're starting to actually see more 52-week lows being made than 52-week highs. That's something to pay attention to. It's not off the charts. It's not tremendous. It's not, in danger zone just yet, but we're starting to get some measurements, some indications that there are some rumblings under the hood that says, there are at least some cross currents to pay attention to right now. So between that and the momentum divergences, you got some mixed currents here in the short to intermediate term to at least pay attention to. We are still above trends, so depending on where you live and what type of trader you are, for those of you who like to respect the trend and really look for that to tip its hand first, then we are still above it, but we do have some of those warning signs present. So that I think is mostly what I wanted to say about the S&P 500. We know the levels to pay attention to. We get the highs from last Friday up here around 29.37 or so. That will be the pivot point to take out there. We have this little mini trend line over the past 5 days that we've kind of pulled back, almost kind of flagged out here. We start clearing above this around 29.23 or so. That might unlock some momentum to the upside. And then we have on the downside this 28.72 area. If we start to fall back in here, we get this little mini false breakout, and then we start to look at this bigger range in here from about 28.72 to 29.15, almost a 40 or 50 point range in the S&P 500 at that point. So that was that's really what's going on there in the S&P 500. If we look at the Russell 2000, this is again now continues to be a little bit of the cause for concern here. The Russell 2000 did find some stabilization here on Friday. It did rebound. We did open on the lows. We gapped down, but that was the lows of the session here. You can see we did close up towards the highs, not quite at the highs of the session, but certainly well off of the lows. The problem is, of course, now is that we are back below this 169.60 area, 170, whatever you want to call it right here. It's essentially back below the June, July highs, and that to me is an issue if we continue to stay below this area. So it is in the bulls' best interest next week to rebound hard off of this Friday's reversal. If we see some expansion, if we see a quick, swift move back above 170, then maybe we, have a nice little signal to work against here. But if we roll over, if we fail, if we move sideways and then continue to roll over here, I would think that would start to affect the market a little more broadly and would certainly put some more pressure on some of the major averages and just generally the market as a whole. So the Russell 2000 on the week here down 1.1%. It is now down below that 170 area, so something to pay attention to. It's at this trend line. It shows some signs of life here on Friday, so don't count it out yet. I do think there is potential here that this could hold on, but if this starts to roll over again, I really do think that that could be an issue here for the market to contend with into October. Finally, Nasdaq 100, this is on the flip side now, the bright spot of this week's trading, because this was up 1%. So we had the Nasdaq up 1%, we had the Russell 2000 down 1%. When we look here at the Nasdaq, we're not quite back at all at these prior highs here made just a few weeks ago. We don't quite have strong momentum going, but we are finding some support here. It's starting to grind back higher here, back to these prior highs, and this will be the point to pay attention to next week, right around this 187.50 area. Those were the prior highs. Can we get back up there? Can we take them out? Can we continue this trend? And can we continue to find support in this tech heavy, higher beta index? That's going to be important to see, and that'll be what we want to pay attention to into next week. On the flip side, on the downside, if we're starting to look at levels, we really just have the past several week lows here. I'm sorry, the lows. So if we look here at a weekly chart, if you take a look at the past couple of week lows, they all come in right around 180.50 to 181. So we have this little kind of 50-cent band of support here over the past 4 weeks. If we start to lose that to me, again, would spell some trouble for the market. That would get me much more concerned in the short term if we start to break down here and lose these lows. For now, we're above it. We'll see if that changes, but this was the bright spot in the market for this week's trading. So that, I think, kind of sums up where we're at. It really depends on time frame. Is so important when you're talking about markets now. Are you bullish? Are you bearish? Time frame is so important as to it always is, but right now with some of those cross currents out there, with some of those mixed signals, you're definitely going to want to know where you live as a trader, what your time frame is, and really adjust and plan accordingly. So that is market environment. Let's get into some other major markets now. We'll go to TLT next, which did stabilize this week. It was a little positive on the week, 17 cents to the upside, which I know doesn't sound like a big deal, but it is a big deal given where it is. Remember, this 116, 117 area here is major support here for TLT, and if this starts to break down, then the long bond bulls here are in trouble. So a little stabilization here is encouraging. By no means are we out of the woods yet. This is still a vulnerable pattern here, but it is at least some stabilization, and we'll need to see if bulls can continue to support this at a pretty big inflection point, and it is something to pay attention to. Next up, if we go to oil, had a very impressive finish to the week, 3.74% performance overall, and we are now breaking out to new year-to-date highs here for oil. If we go back to that daily chart now, the bulls firmly in control on multiple time frames. We have this uptrend that is in place here. You could look at this channel, maybe some more room to the upside. It is stretched, it's tough to chase, but some good volume came in here as this broke out to new highs. It took out the highs made in June, July. So pretty constructive there for USO, all things considered. And if we started to lose this $15 level, 15 and a quarter level, then that would be a potential false breakout signal here. But until and if that happens, it's tough to fight it. Let the bull trend kind of persist there. Next up, if we go to natural gas here, we can look at the performance. It was up 1%, quite a big fade. This was off to a really strong start to the week here. We did get a good fade off of those highs. Remember, last week was the high performing large range expansion, high volume breakout week, 9% or a little over 8%. We got that at least initial follow through. That weekly candle is not ideal, so we'll definitely want to see if this can continue to hold above this 2440 area. Take a look at the renewed volume and interest coming into this market right now. So it is still a market that favors the bulls here in the short to intermediate term. We'll see if that changes, but for now it is holding above the breakout area, and natural gas is trying to get underway. Something I'll be paying attention to is if this consolidation can move sideways a bit more, maybe you can get a trend continuation trade out of it if it does continue to work in that favor. Finally, if we look at metals, GLD stabilized, tried to stabilize anyway, way this week. It was down slightly here, but still much within this range that it's been moving sideways in since early to mid-August. And silver had a much more impressive week, up 2%. Most of those gains, in fact, coming on Friday's session with this 2.4% move higher here on Friday. Did it on heavy volume as well. That is very constructive to see. You can see when we look here at the top end of this chart here, the MACD on my chart, you can see finally trying to get back into positive territory. Constructive to see that it's trying to bottom out here. If we drew this trend line in silver, frankly, from the beginning of June. And again, you can certainly tighten this up however you see fit. I don't want to be precise here with this trend line, just as a general guide, as a general slope. Really, if you were to put it from the July breakdown level, you have a nice kind of breakout here. Does not mean you can just rush out cleanly buying it, but it does at least tell you that there's a change of character here, and that could be, a changing of tides here for silver. So that I think covers all of the majors there. Let's look at some sectors now for this week. So if we look here, we sort the performance of this week by sectors. I throw biotech in here, and IBB is the top performing this week, helping fuel some of that Nasdaq 100 gains, but 2.88% this week to the upside. Just a very clean grind higher here. When we look here at a weekly chart, you can see we're back to these August highs. We do see support continue to develop at higher levels here, and this trend looks pretty good right now. MACD is holding up, so really tough to fight. A lot of strength kind of coming in this area, and we have some pretty strong support around this 116 area. So it's a nice move for IBB. Does not look too stretched, but it's certainly coming back into a prior high there. So something to pay attention to, but nice performance this week. Second in performance this week was technology, and you can see here not quite back at those old highs, but kind of working itself up here. We got this very flat resistance around this 75.40, 75.30 area in the XLK ETF that hovers around this multi-month trend line as well. So it's kind of wedged in here. It's getting tight, and bulls are looking for this breakout of resistance here to move back to those prior highs. Finally is healthcare. This was the third performing sector of the market this week, and look at this trend that emerged here from July. This has really just been levitating higher here. Very little volatility, just continues to grind higher here, staying overbought, remaining overbought. And I know some of the scans that I'm running, I see a lot of names in this space that just continue to base breakout and move higher, so this makes a lot of sense. XLV certainly has had a nice run here. It's tough to chase, but in some of those individual components you may find that you have some better reward to risk opportunities there. On the flip side, we have XLB, which is really ugly looking here this week. Take a look at the series of red sessions here. We're down 6 days in a row, almost on heavy volume right across the board, and we're starting to break some significant levels here in materials. And in fact, if we look at a weekly chart here, we just took out about 6, 7, 8 weeks of lows here in the XLB on this week's session, minus 4.34%. So a pretty ugly weekly candle that developed here in materials. And if we get follow through below here, that certainly is not going to spell anything good for this market, for this area of the market. So XLB certainly in the penalty box right now, down 6 days in a row. I mean, there's I wouldn't be surprised to see a little bit of a pop here, but if that's short-lived, if they sell into it, then, again, that's going to be an issue. So XLB, worst performer this week. Financials right behind it. In fact, it almost looks the same. Take a look at the selling that came in here after 6 days. And, this is really kind of a head fake from last week's finish. So we had a nice, strong, kind of high volume breakout here into the end of last week. We saw this almost double the average 20-day volume here in financials as this started to break out to new multi-month highs. We saw our follow-through session here on equally heavy volume, and what you don't want to see is certainly that breakout level coming back to get retested right away, but you certainly don't want to see this entire structure get taken out to the downside. That really says that you put a lot of traders off sides here and starting to put a lot of recent new longs in here and taking out all this old supply. So financials really look to be in a tough spot here. If we look at that weekly time frame, again, does not bode well at all. We just just took out multiple weeks, multiple months of lows here for XLF. So if we get follow through, if we continue to see pressure here, that does not spell well for this market either. And then finally, we had industrials. Industrials had been the top performing for quite a while. It's had a really nice run throughout the start of July into just the past last week or so. A little bit of cooling off makes some sense. It was down 2% this week, but starting to see a little bit of give back again structurally. Not the end of the world yet. We broke this accelerated trend. We'll see if we can put in some type of higher low here, but doesn't look as bad as financials or those materials. So that is it. That's what I have. There's a lot to get through in this week's video, but hopefully it was worth it. Hopefully you guys find these videos valuable. If you do, subscribe to our channel on YouTube, entirely free, of course, and just keeps you up to date with all of the latest that we are publishing. So with that, enjoy the weekend. Get out there. Hopefully you get some good plans and get away from the charts for a little bit. And I'll be back next Tuesday with our midweek video update. Thanks so much. Talk to you then.